Let's get more on the global implications of this massive run-up in oil prices, with North American crude topping $80 US today. We're joined by Michelle Brouhard, Head of Policy and Geopolitical Risk at Kpler. Michelle, thanks very much for coming on the show. You guys have got an outline list here of potential winners or countries that are relatively invulnerable to countries that are vulnerable. Start off with Russia. Of course, this could well increase demand for that nation's crude.
It could, and Russia is still sanctioned. Certainly, their price has been under a lot of pressure as the global supply was abundant before the war. Mm-hmm. Now that the global supply is constrained, Russia can emerge as being able to sell their oil relatively close to market prices. So they really do emerge as a winner in this.
They have been looking at big discounts on their oil. I mean, that was one of the goals of Western sanction policy.
Yeah, they have had big discounts, but now if you need a barrel of oil, India, which had been turning away Russian oil over the last few weeks from pressure from the United States, has now started turning back toward receiving Russian oil. It appears that Russia oil is going to be more available to consumers who need Russian oil, who have been pushed away from it.
And other non-Middle Eastern producers, Guyana, Canada, I guess, ultimately, and the USA, insofar as it's going to get more potential, or it is going to get more for its massive oil exports.
Yes, definitely. The producers that can get their oil to the market will be the beneficiaries of this move.
What about, will Washington, though, be anxious to see a rise in domestic gasoline prices in advance of the midterm elections?
Yeah, I think that's going to be a problem for the U.S. I think there are still some levers the U.S. can pull that can ease a little bit from the high prices that we're going to see if this war continues on and there continues to be a disruption. Some of the high prices can be eased either through a gasoline holiday that we haven't seen but has been proposed a few times. You could also release some of the SPR so that more product could be made available. The real problem with products is that you can't get the Middle Eastern product out of the strait. And so product is just going to remain constrained no matter how many barrels of crude you have. If you can't process it through the refining, then you're just going to have high product prices until we start to see relief as the Middle Eastern barrels can come to the market.
And you said a gasoline holiday, you mean a tax holiday on gasoline?
Yeah, sorry, the tax holiday, yes. It's been proposed a few times and it's never made it through Congress, but maybe this time it will make it through.
China could be a winner here. They tend to do this, don't they? When commodities are low, prices are low, they snap them up and put them in a stockpile. And they've been doing that with oil?
They've been doing that for the last few years. They probably, from crude oil, they have about 80 days of cover. If you add crude plus products, they have well over 120 days of demand cover. But China has a lot of opportunities to them. First, they have really high inventories, so they can meet their domestic demand, but they also can flex their policy. So their policy has been, in order for you to be able to export a product, you have to get an export waiver from the government or an export quota. And today they closed that quota system off. So now China won't be exporting their product and they'll be keeping it inside of their country. And then the third option that China has is they're still receiving Russian barrels. So while they have been a taker of Russian barrels over the last few years, they'll continue to receive Russian barrels unless Russian barrels will somehow get a waiver so that they can go to other countries other than China and India, which is where they mainly have been finding their homes.
Let's look at the people who are going to be hurt here if this keeps up. Europe it imports vast amounts of oil, and refined fuels, jet fuel, diesel, could be a particular vulnerability.
Yeah, I mean, Europe gets 40% of its jet fuel from the Gulf countries. That's it. That's going to be a real problem. They have about 60 days cover of jet fuel at the moment. If that continues on, we will see very high airline prices. I mean, obviously, airlines are going to be one of the bigger losers of this situation. But European jet inventories could run dry if this carries on for more than 3 months.
I suppose just broadly, we have seen run-ups in oil after violence broke out in the Middle East in the past, and then it's tended to subside. I mean, generally, producers, it's not in their interest, obviously, to see shipments cut off. Could this blow over fairly quickly?
You know, everyone keeps talking about what happened in June and what's happened before, where we have a spike up and then a crash down. In every one of those circumstances, production was not disrupted. Even during Russia-Ukraine, we did not have a disruption in oil production. So this is different. We actually have a disruption in production where we've had infrastructure hit, where we've had waterways closed. And if I had to compare this to a time in history, I would compare it more to the Arab Spring than I would compare it to June 25 or Russia-Ukraine.
Sorry, just remind us, when was the Arab Spring and what actually happened to oil back then?
The Arab Spring was in 2011. And during that time, and to be fair, during the Arab Spring, we did not have shale oil. So now that we have shale oil, because we have more of a fast response time to be able to get oil to the market, it's not going to be exactly like the Arab Spring. But during the Arab Spring, we lost Libyan production, we lost Algerian production, we lost some Angolan production. Basically, all of North Africa was had a lot of oil disruptions to the marketplace. And because of that, we had high prices for a sustained amount of time. And even to this day, I mean, it's been over 10 years and Libyan production still hasn't recovered from that.
That's interesting. And so, sorry, Michelle, before we let you go, was there a sustained rise in oil back then in 2011?
Yeah, we had high oil prices almost for the entire year, and oil prices were around, I want to say around $115 to $120 a barrel.